Hello and welcome to the Weekend Investing Daily Bite of 7th of January. After the big fall yesterday, the markets were stagnant today, I would say. And that is the best that we could hope from the market today. Also, while just recording, a news flash has come that the quarter GDP numbers are out and they are a bit lower than what I would have expected. Also, today in the second part of the video, we will talk about how Nifty50 has become 51 stocks for now. And those who are not yet following this story will find this interesting. We'll go into the mechanics of how the index is managed, going from 50 stocks to 51 stocks. But first, please read the disclaimer. This is very important and is there for your own safety. Subscribe to the channel if you haven't so far. Please let us know why you would not subscribe to the channel. It will help us improve. This is the Nifty chart right there, 0.39%, a virtually meaningless kind of gain after the drubbing in last two sessions. But this is also the same zone from where we have bounced several times. So one would hope that the market is able to find some bottom again in this zone. Else we are going probably much lower. If we see the entire landscape of the events, market topped September end, fell down for a month and a half, had a bounce, started to continue on the downside. In continuation of this, was abruptly stopped here, made another attempt to go up, that also has failed. But the fact remains that from the middle of December till now, we are still at the same place. So net, I mean, in the last, you can say, 2 months, from second week of November, we haven't net fallen from that level. Usually, if the fall is steep and if it has to go lower, this much of waiting around at the same level would not happen. But of course, there is no sort of line written in stone on this. So for now, the levels of 23 to 50, 23,500 remain very, very important. If we are able to navigate this bottom within this range, let's say tomorrow we open gap down and start to come back up, that will be a reasonably positive outcome actually. But of course, we need to come up above some pivot here or here to really confirm the uptrend. Right now, I think forget the uptrend. It will be good to just consolidate in some narrow range and not fall in any big way. I think that is the best outcome that one can think of for the next couple of weeks. 0.39% up for the day. Nifty Junior absolutely flat, not able to even eke out 0.3, 0.4% type of gain, although it did try. And this is now at the same bottom as we were at middle of November. So one big move down on Nifty Junior will really break the back of Nifty Junior stocks. 0.09% here, negative. Mid caps 0.87%. So good clawback on mid caps, almost where we were before this rally and fall. So I would think mid caps are still doing all right, plus 0.87% on that. And small caps also reverting back to that average there, 1.4% up. So mid and small caps are giving you an indication, don't want to fall quickly at least. And large caps are giving you an indication that they are at the edge of that fall. Bank Nifty, of course, 0.56% up, but it is at that edge where below 49,500, all floodgates towards the bottom will open up, and there is a potential of 4,000-5,000 points down further if we go below that. Momentum trends, I would say today was a good day, but today was also potentially a bounce day, a dead cat bounce, you may call it. 378 advances to 118 declines. So while it was primarily towards the advances, but given the context of last 3 days, today's rise was not really a rise. Heat map today, Reliance supported the market a lot along with ONGC, SBI Life, HDFC Life, Hindalco, Adani Enterprise and BEL. IT stocks which were not following yesterday fell today. TCS, HCL Tech, Infosys, Tech Mahindra all down. ICICI Bank came back up 1.2%. Tata Motors along with Titan and Nestle were up more than 1%. ITC remained flat post the demerger, and we'll talk more about this in the second half of the video. In the Nifty Next 50 space, you can see ICICI General Insurance up 3.9%. So all insurance companies doing well today. Many public sector banks, Bank of Baroda, PNB, are having a dead cat bounce after the drubbing yesterday. HAL, BHEL also up. Cipla did very well at plus 4%. Zomato was crushed today at minus 4.6%. DMart minus 2.6%. Naukri down 4.28%. So suddenly a lot of sell on these new age stocks. Also, Varun Beverages, Bosch, Union Bank, Havels losing some ground. Adani stocks were doing well in the markets today. Real estate also doing reasonably all right. Energy stocks taking the lead. ONGC leading this 1.3% up for the day. Metals 1.2%, commodities 1.1%, infra 0.8%. So these are the stocks which really lead when the high beta stocks of the market start to go up, and it was a good sign that these stocks were leading. Real estate up 0.8%, pharma also up 0.7%. Autos, consumption, and IT stocks were the ones which didn't really move along with FMCG. So the defensives took a back seat, whereas the aggressive stocks were moving ahead. So maybe there is a ray of hope of the distribution in which today the stocks have moved. In the last 1 week, most sectors have basically done nothing. Real estate and PSU banks have lost some ground. Autos have gained some ground. But more or less, almost all sectors are plus or minus half a percent. This last few weeks have, rather, last 3 months have sort of disrupted a lot of 12-month performances. So private banks absolutely flat for 12 months. FMCG absolutely flat for 12 months. Nifty up only 10.2% in last 12 months. Bank Nifty up only 5.8%. Energy stocks only 3.3%. So this is much, much lower than where you would want to see these sectors. And this is primarily a consolidation phase that is happening. So after the heady run that we had from November 2023 till September 24, this is sort of a consolidation period where we've spent 3-4 months, and maybe we'll spend some more months, but this is exactly the base that is forming, which is going to be the base for the next move up. So if you are in the market, and hopefully you are in the market for the long term, allow these periods in the market for accumulation, allocation towards the market, gradual accumulation, because once the market starts to go up, everybody freezes like the deer in the headlight syndrome, and nobody is able to allocate at that time. Even if market is falling and your strategy is a continuously self-correcting strategy, then also you can keep adding to the market, because at least your allocation to the market is there, and then as and when the market takes off, that your strategy will take care of the allocation towards the market. Energy stocks, as I mentioned, gradual 1.25% up, although chart is no big deal in terms of a positive outcome. But nevertheless, comparatively, it did better than others. ONGC, Adani Green, Adani Power, Reliance, all doing well today. In the portfolio momentum score, which you can find the description also below, or use this QR code. In the mid-cap stock space, Vodafone Idea has the lowest momentum score. And this is one stock where momentum strategies would have run away from since very much long, and hence protecting you from the bleeding stocks. So Vodafone has gone from nearly 20 rupees to 7 rupees this year, and that's how knowing that a lower momentum score and getting out of the strategy, if it was in during 23-24, is the sort of the best way how you eliminate such stocks. I mean, since January 2022, mid caps are up 80%, while this stock is down 48%. So you can see the relative performance. So let's come to the topic of the day. Nifty50 has 51 stocks. It sounds very funny, but that's what's happening right now. So what is the story? The story is that ITC is going through a demerger. So ITC Limited has demerged its hotel division, ITC Hotels, into a separate entity. So record date was 6th of January. So anybody who was holding stocks as of the previous session, you would have had allocation of ITC Hotels share to you, will come to you 1:10 basis. So 100 shares if you were holding in ITC, you would get 10 shares of ITC Hotels. The price adjustment, how it happens, is something that I want to go through. So there was a special pre-open trading session held 9 to 10 a.m. for price discovery on 6th of January, which was yesterday. And the special session found the new equilibrium of ITC opening price without the ITC hotel. So 5th Jan, you had 5th, actually 3rd Jan, you had the closing of ITC, which was a combined entity, and 6th morning you had the opening of ITC Limited without the ITC hotel. So it was expected that ITC would come down by about 20 rupees, which is the anticipated value of ITC hotels per share of ITC by a lot of analysts. And although it did, open in this very special pre-open session by 26 to 27 rupees, so much lower than 30% lower than where what was being expected. Instead of 20, it came down to 26, 27, and then during the day, because the market was bad, it was much lower as well. So the impact on ITC shareholders is will be determined once the ITC hotel shares are listed. In the special pre-open session, the rate of 6th opening versus 3rd closing was the adjustment factor, and that's what is assumed to be the price of ITC hotel for now. Now, Nifty was having 50 stocks. Nifty always has 50 stocks. But now what special case has happened is that one of the Nifty stocks, which is ITC Limited, has now demerged into another stock also. So there is ITC Limited also, and there is ITC Hotels also. Now, temporarily, the index has to include ITC Hotels, because suddenly they cannot take away ITC Hotels from the index calculation. So what they do is they will add a dummy stock to the index calculation, which is ITC Hotels dummy, and they will give it this adjusted factor price. So 26, 27 rupees is the price which is assumed for now, which is fixed. A constant price is there. And this is the 51st stock in Nifty, or 31st stock in Sensex, and it will be temporarily counted for weightage calculation till the officially it gets listed. So ITC weightage that was there so far will continue to be the same weightage combined of ITC Limited and ITC Hotels, this constant price. Now, after it gets listed, which is expected in a couple of days, the live market cap will then be used for resetting the weight of ITC hotels. So right now it is at a fixed weight of where ITC was, and after that it will be used for weight calculation. And in 3 days post listing, it will get removed from the index. So from the 4th day post listing, so if ITC lists on X day, then X plus 4th day will be the removal day of ITC hotels from Nifty50. And in case a circuit is hit, then the exclusion will get delayed by 2 trading days, because the exchange wants that a free equilibrium be reached on that stock price before it is removed from the index calculation. And in a circuit, it is not really an equilibrium, because buyers are wanting to buy and there are no sellers at that point of time. Now, there is another quirk in the MSCI index, where MSCI, what it will do, MSCI holds ITC Limited just like Nifty and Sensex, and they will add a detached ITC security. They are calling it the ITC debt to the MSCI Global Standard Index, and they will calculate the price basis ITC's pre and post demerger value, again the same one that we mentioned. And this ITC debt will remain until ITC Hotel begins to trade, after which, in this case, in MSCI index case, ITC Hotels actually will remain in the MSCI index, because MSCI index is likely to be included in the MSCI small cap index of the MSCI. So MSCI has large caps, mid caps, small caps, and ITC Hotels is going to be a part of the small cap index. So there will be no removal of ITC Hotels from MSCI perspective, and it will remain as part of the index. For F&O, now there is a qualification criteria for F&O securities that at least 6 months of trading history is required to qualify for inclusion in the F&O segment. So immediately, unless there is a special circumstance, the qualification committee will not include ITC hotels into the F&O criteria in the F&O markets, and it will require regulatory approval of meeting SEBI's quantitative criteria, which again is subjective. So it's most likely that ITC hotels will not be in the F&O segment going forward. So this is how. This was just sort of a summary of how demergers are dealt with in terms of trade, finding the constant value initially, staying in the index, removal from the index, how different international indices handle it, and how the F&O market includes it. Now, the impact of index selling post demerger is also something very interesting, because now imagine that there are so many passive funds, index funds, which are tracking the index. Now everybody will get ITC hotels as part of their holding of ITC, right? And now 3 days later, ITC hotels will no longer be a part of the index. So all the index passive funds, whether it is ETFs, whether it is mutual funds following the index, will necessarily have to sell ITC hotels. And their mandate is to follow the index to the T. So naturally, when on the fourth day, when this 51st stock will be given a boot from the index, they will all have to sell uh, ITC hotels from their holdings. And because of that selling process, and because passive funds are so large in terms of the quantum of money that is following passive funds, there is going to be a huge force selling by index funds on this. And this will create a tremendous selling pressure on ITC hotels, of course, irrespective of the stock's fundamental or whatever equilibrium level that you may call it. So short term, post demerger, there may be opportunities for value buyers, certainly no opportunity for momentum investors, but for value investors there may be opportunity, because this is a forced liquidation event where all these tens of thousands of crores of AUM having got allocation of ITC hotel have to necessarily sell, and then hopefully other funds who want to get into ITC hotels beyond what ITC limited allocation they already hold, in case somebody wants to up their potential percentage holding of hotel industry, only those will be the counter institutional buyers for this. So there may be a situation where a very abnormal pricing of ITC hotels may come into the market. So as potential value buyers, maybe some of you may get interested into this kind of a situation. So this is what I had to say on this very unique sort of technical maneuver that is happening in our index. And so it's always good to know about all this, even though you may not trade ITC, you may not have index funds, you may not have anything to do with this. But this is good information to know how market indices work when they're hit with certain situation like this. So share your perspective also on this demerger story. What are your thoughts about it? And thank you so much for watching. And do like and share these videos. We are waiting for your love, for you to subscribe to our channel. If you haven't so far, please do so. If you are not doing so, please let us know why you're not doing so. We would love to know the reasons and improve our channel. Thanks. Bye.